Hello and welcome everyone and good morning. My name is Yasir Gulfraz and I'm your tutor for assurance. Today unit, our goal is to make sure you walk away with a solid grasp of assurance in finance. So we are going to look at who's responsible for what is in assurance, understanding why internal control matters, and get hands-on with gathering evidence for assurance activities. So today's topic, learning outcomes 2, understand the nature and importance of internal audit. So if anyone is there, can you guys see my screen and can you hear before I go ahead? Okay, so the aim of this unit is to provide learner with an understanding of the concept of assurance. So learners will consider the responsibilities of different stakeholders when completing assurance engagements and will gain an understanding of internal control and their importance in assurance engagements, as well as gain a practical understanding of how to gather the required evidence for all assurance activities. Audit assurance, obviously audit assurance refers to the level of confidence, certainty that auditors provide regarding the accuracy and reliability of financial information. So the primary purpose of an audit is to express an opinion on whether the financial statement of an entity or presented fairly in all material respects in accordance with the applicable financial reporting framework. Self-assessment, just to check your knowledge on a scale of 1 to 10, rate your current knowledge of internal control and insurance. That is as confident as possible, or not confidence 1 to 4. So anyone is there? Any issue or any, just let me know if you can't see my screen or anything. So, right, indicative contact components of internal control for both computerized and manual systems with consideration for the control environment, preventative and effective controls and internal audit, assurance risk, components of the risk model, inherent risk, control risk, detection risk, legal responsibilities and liability, method of minimizing risk, audit engagement, exercising professional judgments. So here now we are we will identify the need for organizations of having effective system of control, then discuss the need for the main areas of a business that need effective control system. Then a third one is describe the components of internal control in both manual and computerized environments, explain how internal controls are evaluated and conclusions, and then analyze how internal control mitigate risk. So let's get started with the internal control in the process designed, implemented, and maintained by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of the entity's objective with regard to reliability of financial reporting, effectiveness and efficiency of operations, and compliance with applicable laws and regulations. So internal control, a crucial aspect of ensuring organizations stay on the right track. Internal control is like the guardian of a business, designed, implemented, and maintained by those in charge to give us reasonable assurance that the company's goals are met. So these goals revolve around reliable financial reporting, effective and efficient operations, and compliance with laws and regulations. So here next is components of internal control and relevant controls. So let's break down the components of internal control to better understand how this, guardians operate. So first up, we have the control environment. Think of this as the overall atmosphere within the organizations. It sets the tone, influencing the awareness and actions of everyone involved. So a positive control environment fosters a culture of accountability, integrity, ensuring that everyone is on the same page when it comes to achieving objectives. So risk, next we have the risk assessment process. In the business world, we know that risks are like unexpected hurdles on the track. So the risk assessment process help us identify and tackle these hurdles hands-on. It's about understanding what could go wrong, how likely it is, and what impact it might have to. Uh, bus- uh, by doing this, we are better prepared to navigate the twists and turns of the business journey. So here in today's digital age, information is power. The component insurance ensures that the information we use for financial reporting is accurate and reliable. So it is like having a trustworthy, GPS guiding us through the financial landscape. Components of an internal control and systems. So the vibe that think of the control environment as the atmosphere within organizations, the vibe that shape how things get done. So let's break it down. The control environment, it's all about the government and internal control systems, or the control environment is all about the government and management functions with the company. It is like the backstage crew ensuring the shows run smoothly. So we are talking about the attitude, awareness, and actions of those in charge of designing, implementing, and yeah, sorry. So the within the control environment, there are several elements that are crucial for us to understand as auditors. These elements give us insights into how well the organization is set up to achieve its goals and manage risks. So let's take a closer look at some of these key elements: communications and enforcement of integrity and ethical value. So this is the moral compass of the organizations. It is about how well the values of honesty and ethical are not only communicated but also enforced throughout the company. It is like making sure everyone is on the same page about doing things the right way. So commitment to competence imagines a team where everyone knows their stuff. So that's this element is about. It is the organization's dedications to ensuring that its people have the skills and knowledge needed to excel in their roles. It is like having a team of super, you know, heroes, each with their unique skills. So participation by those charged with the governance, this is about getting the big wigs involved. Leaders of the organizations need to be active participants in the internal control game. It is like having the captions on the field, not just in the stands. Sorry, captain on the field, not in the stands. Internal controls, there are two critical components: the control environment and the risk assessment process, as you can see here. So these aspects lay the groundwork for how a company manages its operations and safeguards its integrity. Control environment: a workplace as a dynamic ecosystem. The control environment is like the air we breathe, the influences everything. It is not just about rules and regulations, it is about the attitudes, awareness, and actions of the people steering the ship. Management sets the tone for the entire organizations. So if they prioritize doing things the right way, it creates a culture that values integrity and ethical behavior, communications, and enforcement of integrity and ethical values. Consider a team where everyone knows their rules and excels in it. That what this elements is about. It is the organization's commitment to ensuring its people have the skills needed to succeed. It is like having a team of people, each bringing their unique skills to the table. So participation by those charged with governance. Then management, organization, the structure is how is like as a puzzle. The structure is how all pieces fit together. It is about who reports to whom and how information flows. It's like having a clear map of those does what in the company. Assignment of authority and responsibility in any team. It is crucial to know who's calling the shots and who's handling different tasks. So these elements is like having a well-defined playbook that say who tackles which challenges. Human resource policies and practices, uh, uh, nurturing talent, people factor is huge element. Is about understanding how the organizations attract, develop, and relevant its talent. It's like having a strategy of recruiting and nurturing of the players on the team. Any questions so far, if anyone is there? So internal control here again, we going through internal control continues as we explore the information system, internal control information system, and the crucial control activities that keep everything in check. So it is like the main part of any organization, ensuring that data flows smoothly and transactions are recorded accurately. So when we talk about information systems, information system as the digital nerve system for a business, it is the backbone that's supporting everything, consisting of infrastructures, uh, software, people, procedure, and the lifeblood of it all. Uh, software. When we talk about next is a control activities in this context. This involves a series of elements that ensures the information system functions correctly and in line with the organization's objectives, policies, and procedures. Policies and procedures are like the blueprint that ensures management directives are carried out. They provide the guidelines for how things should be done, ensuring consistency and compliance. Monitoring control, when we talk about monitoring, a process of assess the quality of internal control performance cover times. So a process to assess control quality over time. Think of this as the continuous improvement plan. It is about assessing the quality of internal control performance over time, ensuring that controls are not only operating as intended but also modified as appropriate to adopt to charge changes. So then internal audit functions may perform this. So internal audit functions plays a very important role. They are like the internal watchdogs, assessing and providing assurance on the effectiveness of internal controls. It's an essential additional layers of scrutiny of to ensure that everything is in order. Any questions or any comments, if anyone is there? Here we are discussing the realm of auditing, exploring statutory requirements, the intriguing process of walkthrough testing, and how auditors assess control risk. So buckle up for an engaging journey through the world of financial scrutiny, statutory requirements, keeping the financial house in order. So first up, we'll talk about statutory requirements. Picture this is the legal framework ensuring this one statutory requirements. So uh, ensuring the financial house of a company is in order. Directors are the key players here, and by law they are obligated to maintain accounting records that accurately reflect the company's affairs. So these records should provide a reasonable snapshot of the company's financial health and at any given time. So auditors plays a important role in ensuring director can meet this legal duty. We are like financial detectives, assessing whether the system in place allows director to keep their uh, end of the statutory bargains. Then walkthrough testing, uh, obviously tracing transactions through the maze. uh, our investigative tool is in the auditing toolkit. It is like following a trail of breadcrumbs through the financial maze. So here's auditor trace one or more transactions through the systems, observing how the control system influences these transactions. Control risk assessment. Uh, Here, once the system has been walked through, the auditors can make an assess of control risk. So we will look at risk assessment in chapter 4. Uh, so still, anyway, consider control risk assessment as our initial impression of how well the control system is designed and operating. It is our way of figuring out whether the financial fortress is robust as has potential weak spots. In summary, statutory requirements set the legal expectations for financial record keeping and auditors steps in to ensure directors can meet these obligations. Any questions so far, if anyone is there? Test of controls. Why test of controls? Unraveling the mystery tests of control becomes necessary when our risk assessment points to an expectations of how well internal controls are operating. So it is like saying, let's make sure the safety nets are not just juggling there, but are strong enough to catch us if needed. So if relying solely on substantive procedures isn't sufficient, that's our cue to dive into the realm of tests of controls. Inquiries and observations. Uh, inquiries and observations. Here, we uncover the methods auditor use for these tests. First is inquiries and observation of control activities, inspections, examination of evidence of management views, re-performance, and the testing of control operating on specific computer applications. So basically, tests of control are a tool for ensuring that internal controls are not just a paper but are actively safeguarding the company. It is journey into the heart of a company's financial safety measures, ensuring they are not uh, just symbols but active guardians of accuracy and reliability. So stay tuned as we continue our audit adventure. Control activities, revenue system control objectives. Uh, Picture the revenue system as the bathing heart of company. It is where transactions flow and money comes in. Now let's discuss the control objectives and the internal control in place to mitigate associated risks. So control objectives: safeguarding the revenue flows, uh, order granting credit control, ensure that orders are granted to customers with good credit rating who are encouraged to pay promptly. Linked risk of extending credit to customers who might not fulfill their payment obligations. Orders are correct. Next is confirms that orders are accurate and aligned with customers' expectations. Risk of processing incorrect orders leading to customers' dissatisfactions. So again, orders are fulfilled, ensures that ordered goods are successfully fulfilled. Risk of inventory mismanagement or failure to meet customers' demands. So now let's delve into the internal control, the safeguards put in place to achieve these controls objectives, building the fortress of financials integrity, ordering, granting credit, safeguarding of duties, separate responsibilities for credit control, involving and dispatch of prevent potential fraud or errors. Then record accounting, credit control, all dispatches are recorded. Track every dispatch to have a clear record of transactions. Transactions are controlled in correct accounts, ensures accurate recording to prevent financial mistakes or misstatements. Dispatch involving dispatch and involve invoicing. All dispatches are recorded. Invoices is correct and for good suppliers. So when we talk about credit notes, uh, given are for valid reasons, recording, accounting, credit control. Transactions are recorded in correct accounts in correct period in recoverable debts data identified. So prevent invoicing errors and ensure accuracy in the billing process. Given credit notes given are for value reasons. Uh, Ensures that credit notes are issued only for legitimate reasons. So ensure the credit notes are issued only for legitimate reasons. Test of controls, verifying the safeguards now. So how do auditors ensures that these internal controls are not just on paper but actively functioning? That's where tests of control comes in. So evidence of references, check the evidence of referencing, test of controls check of for evidence of references, authorizations, credit terms, limits, matching orders. So confirms that references are appropriately documented, authorization, verify that proper authorizations is obtained for a credit terms and limiteds. Credit terms, so uh, credit terms obviously confirms that references are appropriately documented, verified that proper authorization is obtained for credit terms and limiters. Then matching orders ensure that orders are consistently matched with the dispatch records. Any questions so far, if anyone is there? Control activities. Here, we are continuing our exploration of internal control, focusing on the critical areas of dispatch, invoicing, accounting, record, credit control. So these controls act as vigilant guardians of financial accuracy and integrity, ensuring that transactions are not just proceed, but are also accurately recorded and safeguarded. Dispatch invoicing, ensuring accuracy from warehouse to invoice. So here we'll talk about the internal control in the dispatch and invoicing process. Picture this are a relay race where the baton is passed from the warehouse to the billing department, ensuring accuracy and quality at every steps. So like authorization of dispatch, examination of goods dispatch, recorded of goods match dispatch, sequential numbering of pre-printed dispatch notes, signature of customers on delivery notes, authorization of price, arithmetical checks on invoice. So basically, accounting, recording, control are the backbone of financial. They ensures that the transaction is not just recorded, but recorded accurately and safeguarded against potential risks. Test of controls act as our auditor's lens, verifying that these safeguards are actively in place. Together, they form the cornerstones of financial accountability and reliability. Any questions so far? So purchases system control objectives link back to risk ordering, receipt, invoices, or accountings. So here we will focus on the control objectives and internal control in place to mitigate potential risks. Imagine this is a journey through the procurement process where each control is like a checkpoint, ensuring the integrity of every purchase. So control objectives, safeguarding the procurement process. So first, ordering, ensure the orders are authorized, made for the companies from approved suppliers and at the competitive, prices. So receipts, invoices, goods should not be accepted if they come from an authorized order, preventing receipt of authorized or or unordered items. Accurately recorded record receipts good accurately to avoid mistakes. So liability recognized for goods received, ensure that financial liabilities are appropriately recognized for all received goods. Credit are claimed, identify and claims credits for any returned or defective goods. Accounting, again, expenditure is only for received goods. authorized expenditure only for goods that have been authorized, then authorized, ensure that all expenditures are authorized, properly recorded, accurately record all transactions related to purchased, then in correct account, so allocate expenses to the correct account to maintain accurate financial record, correct periods, make sure that record transactions in the appropriate accounting periods. So again, test of control, verifying the safeguards in actions. So purchase system, which is control objectives and internal controls, form this backbone of a company procurement process. It is not just about acquiring goods, it is about doing so in a way that is authorized, cost effective, and aligned with the company's policies. Tests of control act as our auditors' tools to validate that these safeguards are actively preventing risks and maintaining the reliability of the procurement process. Any questions or any comments if anyone is there? So the critical process of goods received and the correspondence, corresponding accounting procedures. Picture this as the backstage of a grand performance, the meticulous steps taken to ensure the quality of goods and the precision in financial recording. So our focus will be on the internal controls in place to safeguard these process and the tests conducted to verify their effectiveness. Internal control embedded in the goods receipt process. This is where we ensure that the products entering our inventory meet the expected quality standards and align with our purchasing orders. So next one is accounting safeguard segregation of duties, uh, recording, checking, prompt recording in day books and ledgers, comparison of supplier statement to ledger accounts, authorization of payments, review of allocation of expenditures, reconciliations, reconciliation of purchase ledger with the total of balances, procedures for cutoff. So in conclusion, the internal control in goods received and accounting process are the invisible hands ensuring the accuracy and reliability of our financial record. Tests of control act as the auditor's lens, verifying that these safeguards are actively preventing risks and maintaining the integrity of entire procurement to payment process. Any questions so far, if anyone is there? So cash system and control objectives, we will focus on the control objectives and the internal controls put in place to ensure that every penny is accounted for from the moment is received to when it's recorded and safely banked. So control objectives, firstly, understand the control objectives, the guiding principles that ensure our cash system is robust and secure. Control objectives generate that every penny received is promptly banked, accurately recorded, and protected against loss or theft, risk of emplacement, misappropriations, or theft or cash. So all payments are authorized, made out to the correct pays recorded. So ensures that every payment is authorized, made to the correct receipts, and accurately recorded risk of authorizations payment, misdirected funds, or inaccurate recording of expenditures. So when we talk about the internal controls, so in play to achieve these objectives, so internal control fortifying the financial fortress, receipts, safe segregation of duties, separate responsibilities of prevent errors or fraudulent activities. Then safeguardings at post appropriate two people, uh, employ two individuals to open and list incoming posts, creating checks and balance systems, then post stamped with date of receipts, date stamps every incoming post to track the timing of receipts, restrictions on receipt of cash, salespersons only, limit the receipts of cash to designated individuals such as salespeople to control, access agreement to cash collection to till rolls, regularly reconcile cash collections with till rolls to ensure accuracy, a prompt maintenance of record, giving and recording receipts of for cash ensures that receipts are promptly given and recorded for every cash transactions, tests of controls verifying the safeguards in actions. So here let's discuss how auditors ensures that these internal controls are not just theoreticals but actively operational. So where tests of control comes into play, observes post opening, personally observes the process of post opening to ensure that it involves the stipulated two individuals and that the listening to is accurate. So trace entries on listening to cash book, paying in book, bank statement, verify the accuracy of entries on the listening by tracing them to the cash book, paying in books, and bank statements. So safeguarding and safeguarding the well, in a sense, auditors conduct these tests to ensure that the uh, you know account highlight these, I think so. Yeah, these, all of these safeguards test ensures that the internal controls are actively preventing risks and maintaining the integrity of the cash systems, safeguardings the financial health. In conclusion, the internal control in cash systems are like the vigilant guardian of our financial health. They ensures that every penny is accounted for from the moment it's received to when it's securely banked. Tests of control act as our auditors lens, validating that these safeguarding guards are actively preventing risks and maintaining the financial integrity of our system. Any questions so far? So, in our further reading, bank and payment. So, banking of receipts, you know, daily banking, restrictions of on opening new bank accounts, limitations on cash flows, surprise cash accounts, custody of cash and checks, restrictions, issuing bank checks, bank reconciliations. And then we talk about payment, uh, check acquisition supported by documentation, authorized signatures, prompt dispatch of signed checks, payments recorded promptly, cash payments authorized, limit on disbursement, rules of cash advances to employ. So, in conclusion, the internal control in banking and payments are the silent guardians of our financial fortune. So, they ensure that each transaction is conducted with, you know, carefully from the moment money is received to when payments are made. So test of controls, test of controls, in banking and payment are, test of controls serve as test of controls serve as our auditors assures assurance that these safeguards are actively preventing risks and maintaining the financial health of our organizations. Now, inventory system control objectives link back to risks, recording, protecting, inventory holding, valuations. So recording, obviously, all inventory movement recorded, authorized, all inventory recorded is owned by company, inventory recorded exists, inventory quantities recorded are correct, cut-off procedures correctly applied. Then protections, safeguarding against loss, theft, damage, inventory holding levels in inventory held are reasonable, costing system value inventory correctly, allowances made for slow moving, uh, obsolete inventory. So, safeguarding of duties, recording goods inwards, met and checks, inventory issues supported by documentations, inventory record maintained. So safeguarding the triggers, so the internal control in inventory systems are guardian of our triggers trove. So ensuring that every item is accounted for, protected, and valued accurately. Tests of control serve as our auditor assurance that these safeguards are actively preventing our risks and maintaining the integrity of our inventory system. Then further protections, valuations, inventory holding, and tests of control. So when we talk about protection, precautions against theft, precaution against deterioration, security over inventory held by third parties, regular inventory. When we come to the valuations, ensure that the valuation method used to appropriate for the nature of the inventory. Calculations are checked, conditions of inventories reviewed, accounting for waste is provided for. Uh, test of control, check of sample of inventory, record goods received and records dispatch, notes, check sequences of inventory record, observe security arrangement for inventory, consider the environment in which inventory is held. So the internal control in inventory management are the important that guard our valuable stock against threats and ensures accurate financial representations. Our tests of control serve as our auditors' assurance that these safeguards are actively preventing risks, maintaining the integrity of our inventory system. So payroll system, employees only paid authorized amount of work done, deductions are recorded and pay agreed to bank record, correct employees are paid, deductions are correct and paid over the to the correct authorities, internal control and tests of control. So the guiding principle that ensure our payroll systems operates with accuracy and compliance. Employers only can pay the authorized amount of work, ensure that employees are paid only the amount authorized, for the work, and correct employees are paid and deductions are, correct, are correct and paid over the correct authorizations. So internal control, safeguarding, segregation of duties, authorizations, again, recording of any charge, custody of cash for cash payments, maintenance of salary bank account, reconciliation of account, recording of payroll, reconciliation of deduction, surprise cash uh, account. So uh, the uh, the the basic thing is uh, conduct details here in payroll, conduct detailed checks on mathematical calculations, posting the reconciled payroll record with accurate cash transactions. So in a sense, these tests act as the auditor's magnifying glass, ensuring that our internal controls in the payroll systems are actively preventing risks and maintain, the whole records. So in conclusion, upholding payroll integrity, uh, you know, uh, the internal control is payroll systems are the guardian of fair compensation, accuracy, and compliance. Test of control serve as our auditors' assurance that these safeguards are actively preventing risks and maintaining the integrity of our payroll process. Now, non-current assets system control, non-current assets additionals are authorized, are kept securely, disposal are authorized, or properly accounted for, depreciation reasonables. So internal control, uh, authorization for purchasing non-current assets registered, maintained, reviewed, assets inspected regularly, budgeting for purchase, sales, depreciation rates authorized. So basically, the internal control for non-current assets are the guardians of our long-term investments, ensuring that they are authorized, secure, and contribute positively to our organization's success. Tests of control serve as our auditors' assurance that these safeguards are actively preventing risks and maintaining the integrity of our non-current asset management. Right. So click to add on way to try a member of typical control that a business operates is by using the memories of ACCA maps. So authorizations, uh, computer control, expenses, claims of purchase, computers controls, password backups, virus checks, comparison, comparing budget versus actual and reviewing of variances, arithmetic control, for example, recalculating hours worked on timesheets, maintain review control accounts, for example, sale, purchase, ledger, control account, accounts reconciliations, bank reconciliations, sales, purchase, ledgers, reconciliations, physical control, for example, locking mechanisms, CCTV safe segregations duty, for example, purchase ledger clerk does not process payments to suppliers to reduce risk of false supplier or any, fraud. So basically, by remembering ACC, AMPAPS, ACCA maps, businesses can establish a comprehensive sets of control, covering various aspects of their operations, from digital security to financial accuracy and physical asset protections. So this, main service as a useful tool for uh, maintaining effective internal control within organizations. Any question if anyone is there? Any question if anyone is there? So assurance again, we come to the assurance. Assurance engagement entails the key players involved and the inherent limitations that auditors faced in, providing assurance. So, boosting confidence in evaluation, assurance engagement is like a quality stamp on the evaluation or measurement of a subject matters against specific criteria. The goal is to increase the confidence of users who are not the ones responsible for the evaluated matters but are keenly interested in its outcomes. So, in the context of an audit, here's how the key players align. So, first of all, here is talking about practitioners, uh, you know, or practitioners, auditors. So, this is the professionals, professional, often an accountant conducting the audit to evaluate the subject matters against established criteria. Intended user, these are the individuals such as shareholders, owners, seeking assurance about the evaluated subject matters reliability. So, responsible party in the audit world, this refers to the managers or directors who are responsible for the subject matters being evaluated. Then subject matters on which opinion is given a financial statement. In the case of an audit, this is typically the financial statement which are scrutinized against criteria like accounting standards and legal requirements. Uh, Challenges faced by auditors, so in inherent limitations. So then inherent limitations of auditors, you know, uh, subjective judgments by directors. Directors may not give all information to auditors. Possibility that fraud has been concealed or sampling or evidence persuasive, not conclusive. So basically, as we navigate the audit landscape, understanding these, nuances help us appreciate the complexities involved and the importance of auditors in enhancing confidence in financial reporting. Any questions, if anyone is there? So understanding the entity environment, the objective of the auditor is to identify and assess the risk of materials misstatements through understanding the entity and its environment, including the entity's internal control. So understanding of what industry regularly, other external factors, nature of entity, uh, objectives, strategies, business issues, measurement, and review of financial performance, internal control as outlined in, chapter 4. So basically, internal controls helps the entities stay on the right side of the law by embedded compliance checks with its process. The entity can reduce the risk of non-compliance with various regulations. uh, in journal navigating the risk landscape. In conclusion, the auditor's objective is a meticulous journey through the entity's environment, seeking to understand the external factors, the entity's nature, and the nuances of financial performance. Internal control act as trusted allies, fortifying the entity against material misstatements. Audit risk, audit risk of risk that auditors states are fairly financial statements are fairly presented when they are. So risk of material misstatements, internals and control risks. So also inherent risk and control risk. Inherent risk is like the wild card in the deck. It is the risk that material misstatements could occur due to the nature of the items or the context in which they exist. For example, complex transactions or volatile market conditions might heighten inherent risks. So control risks, this is the risk that the entity's internal control system, it is a fortress against financial misstatements, might not functions as effectively as intended. It is about the risks that controls in place won't prevent or detect material misstatements. Then detection risks, detection risk. This is the risk that auditors, despite their best efforts, won't catch a material misstatement that is lurking in the financial statement. It is the possibility of oversight during the audit process. Any questions so far, if anyone is there? So again, audit risks, well, auditors uh, play a vital role in ensuring the accuracy and reliability of financial statements. So, starting with the auditor's limited control over inherent and control risks, uh, the auditor has no control over inherent and control risks which are affected by the entity. So if the auditor's preliminary assessment includes an expectations that controls are operating effectively, control testing should be taken, assessing risks, assess the adequacy of accounting system as the basis for the financial statements, identify the types of potential misstatement that could occur, uh, then consider factors that affect the risks misstatement, design appropriate audit procedures. So auditors operate as delegate navigate in the sea of risk assessment and testing. So while we can control inherent and control risks, we meticulously evaluate, test, and analyze to ensure financial statements unfold as expected. It is dynamic journeys, much like steering throughout the nuances of captivating play. Materiality, uh, the auditor judgment and why it is uh, cornerstones in the audit process. Uh, Understanding materiality, the auditors compass materiality is not just a term. It is the auditors compass guiding them through the vast landscape of financial statement. It's a measure of how crucial items and issues are both in the context of the entire financial pictures and on an individual level. So materiality is also about potential impact of an item. Even if an item is not large in absolute uh, terms, its effect on the financial statements may be significant. It is about acknowledging the ripple effect that certain details can have. So basically, materiality is the auditor's north star guiding them through the intricacies of financial statement. It involves judgment, patience, and nuanced understanding of what truly matters as we navigate the landscapes, auditing members, that materiality is the lens that brings clarity to the financial narrative, ensuring that the focus remains on what truly shapes the financial picture. Significant risks require special audit consideration, related party transactions, unusual transactions, fraud risks, indicator fraud risks. Is management incentivized? Is there opportunity? Are these rationalizations for fraud? So auditor must discuss suspectability of financial FS to fraud, evaluate relevant controls, carry out extra procedures, document findings, report to management party, consider impact on the rest of the audits. So basically, consider the impact of these significant risks on the broader audit. Auditors must adopt their approach and focus to ensure a comprehensive examinations that addresses the heightened risks. So the auditor's vigilant stance in conclusion, significant risks demands the auditor's vigilant stance, whether navigating the complexities of related party transactions, scrutinizing unusual financial moves, or confronting the ever-present specter of fraud risk. Auditors play a vital role in upholding the integrity of financial statements. So here some references for your further studies. And that's it for today, guys. If any questions, any concern or issues, please drop me an email at Yasir at UKversity, yasir@ukversity.co.uk. And thank you very much for joining me today. And I'll see you next Saturday, 10 o'clock for our third session. Thank you very much for today, and have a good day, and bye for now.